Florida homeowners insurance in 2024 is unlike anything that we've ever experienced before. And today I've got a local expert coming on to talk about how much does it actually cost to insure a house? Why is Florida homeowners insurance so expensive today? And I'm gonna ask her to predict the future. Does she think that prices are gonna continue to increase or we're gonna see them start to level off? Well, what's up everyone? My name is Matt Light. I'm a local realtor here in the Sarasota, Florida area. And this is a two-part video series. Today we're talking about, general costs of insurance, new construction, kind of what the forecast looks like. But tomorrow, make sure you come back because tomorrow we're gonna tackle waterfront properties. We're gonna talk short-term rentals like Airbnbs. And then we are also gonna talk about the topic of flood insurance. So you're not gonna wanna miss that. Make sure you come back same time tomorrow. And so today I have Julia Dees from Dees Insurance joining me, and we're going to talk all things insurance. We're going to go through the nitty gritty. And Julia, I have so many questions for you. So many questions that I have from a realtor perspective, and I'm sure there are so many buyers that have the same exact questions. So we're going to literally jump straight into it. What happened? Prices are crazy. Like insurance prices are through the roof. My price has doubled. I live in a newer house.
Right.
How did we get here?
Well, I like to look at this market right now, which is what we're calling a hard market. And that is simply, it is going up and down, cyclical in insurance. Right now we're in a hard market and it is a melting pot of a bunch of different things. It's not one thing. I think people who are not from Florida typically look at just the hurricanes, and it can seem a little bit scary because we are not in control of the hurricanes. They're going to happen again, but we have to remember that they've happened and they're going to continue to happen, and we've been fine. So it's a bunch of different things added up together, including some fraud that has happened in the past. It's including, obviously, storms are a risk. There's reinsurance rates have skyrocketed.
What is that? What's a reinsurance rate?
Reinsurance rates are the insurance carrier's insurance policy. So when an insurance carrier, when you file a claim and they have a big catastrophic loss, like a hurricane would have, you are going to the insurance carrier will file a claim. So they're only paying their deductible, which is probably millions of dollars, instead of paying out the billions of dollars in claims, that's where their policy kicks in. Well, as the risk of anything goes up, so do the rates. And the rates for the reinsurers have skyrocketed in Florida because of a lot of the other issues besides just storms. And simply that has caused those to go up, and that gets passed down to the end user. That's something that doesn't get talked about a lot, and that's just because the general public doesn't really know.
Right, because I feel like the buyers that I work with all the time, they're scared to death of storms,
Mm-hmm.
And what the news tells them, and
Right.
they don't, I've lived here for 24 years, been through a lot of storms. I think we've only ever lost power 3 times.
Right,
And I tell them, if you're living in New York, you probably lose power more every winter than I have in my entire life. But it's not just storms that it's going up, it's other things like fraud, and talk about that a little bit, because I think that's important for buyers to understand that it's not just, Hurricane Ian came through, here's clickbait, and you have all these, you can't get insurance anymore and all this stuff, but it's not really just that. That's a small component to it, but there's fraud that's been going on. Talk about, what do you mean there's insurance fraud?
So right now, and again, this is cyclical, fraudsters are going to be fraudsters, right? They're always going to find a way to get around the laws that are passed. I will put a caveat on that there's been a lot of special sessions. These laws have changed. So I don't want this to cause concern because it's already has been addressed and it's going to continue to get better because of that. But a lot of the fraud had come from contractors who were basically having homeowners sign over their benefits, which was called assignment of benefits. And a lot of them did not know that's what they were doing. Then they were going and suing the companies for whatever that they were doing. A lot of this reflects back to roofers. Not all roofers are bad, but there were some bad in the bunch that kind of ruins it for all. And they were going after filing claims for things that weren't necessarily appropriate claims. And the insurance carriers were being litigated heavily. And a statistic that's super important to recognize is as far as home insurance claims in Florida account for the entire country, Florida accounts for around 8% of the home insurance claims for the country.
Wow.
However, litigation-wise, Florida accounts for 76% of all litigation for the country.
Wow.
So wildly off. And that is just a really small snippet to give you an understanding of how the fraud had really taken over. So you've had insurance carriers paying out significantly more than they would have had there not been all of this going on. As well as at the end of the day, the worst situation was that the actual homeowners were not getting a lot of money. It was going a lot to the contractors and a lot to the attorneys. So a lot of that has been changed around. New laws have been passed over the past couple of years, and we're including.
So what's like a real life example of like a contractor taking, a homeowner's rights? So what? Like they would think, hey, you might have a bad roof. I can help get you a brand new one for free. Is that kind of what they were going around doing?
Pretty much. A lot of times you find these neighborhoods and they would go door knocking and they said, your neighbor just got a new roof.
Yeah.
The insurance paid for it. Let's go ahead and get you a claim filed. I will file it on your behalf so that we can get you this free roof.
But based on what?
Based on, if there was a storm that came by a few months ago. Don't you remember that? I don't know. Well, there was. And so let's go ahead and it's validated because, Johnny down the street, he got a new roof for free.
Yeah.
So let me do this for you. Sign this, and they sign it. And then now they no longer own the rights to their policy. That contractor does. And so they can say, all right, insurance company, this is a $15,000 roof, but we want $30,000. And the insurance company's like, it's a $15,000 roof. For one, I don't know if you even have a claim, but two, I'm definitely not paying double for that. And then they say, okay, great, we'll see you in court. So that's where it happens, and the homeowner is kicked out of it because they've signed that assignment of benefits that has been now assigned to the contractor, and the contractor chooses whether or not to litigate at that point.
Oh, wow.
So
Okay.
it definitely got a little hairy, and it was happening very, very frequently, and unfortunately, homeowners were taken advantage of.
That's wild. Okay. So I want to shift gears a little bit into new construction.
Okay.
I work with a ton of new construction buyers. I know you know that. And everybody that I work with, not everybody, but a lot of people, again, they don't really understand how much does insurance actually cost. So I'm going to go ahead and pull up my screen right here. And I want to talk about a specific neighborhood called Talon Preserve. Talon Preserve is in Palmer Ranch. It's on the southern end of Palmer Ranch, I think it's like 5.5 miles to Nokomis Beach. And so they've got a lot of different floor plans in there. They have things like this, the Seagrove, the Cascadia. Those are attached villas that share a wall.
Mm-hmm.
They share a roof. And then you've got small single family homes. For something like this, if someone was, and again, I know it's not a real quote,
Right.
not going to hold you to it, but an attached villa, 1,500 square feet, 2-bedroom, 3-bedroom, sharing a roof. What can a homeowner expect to pay in an insurance premium?
So it's really going to depend on whether, and I don't know the specifics of Talon Preserve off the top of my head, if they are responsible for the exterior of the unit or not. That's a misnomer. If just because a condo is considered a high rise, if it's a detached or attached villa, townhouses, if they are responsible for the exterior or not is what's going to determine if it's a homeowner's policy or a condo policy. So obviously with a condo policy, if that's what those are, it's going to be walls in. You're insuring a lot less, so those are going to be a lot less expensive. So we're talking about maybe $1,000, give or take. And depending, a lot of it has to do with how much personal property you have. If you're insuring walls in and you don't have much belongings, you can obviously drop some of that coverage and decrease that. If you have a lot of nice things, then you're going to want to increase that coverage, and that will in turn increase the premium.
Okay. So then talk to me a little bit about, a small single family home. They've got a couple of those, they range from 1,500, 1,600 square feet. Again, brand new, built 2024 code. Yes, you're insuring your roof. You own the structure. What are we kind of looking at?
I would say somewhere for like a 2.2, somewhere maybe in the 1,500 to 3,000 range. Again, it's going to depend on what you have, what you want to insure, and also what kind of carrier that you're looking for and some of the specific nuances within the carrier. So some have really great, different programs for step down deductibles. Others have these perks or that perks. And so you're going to want to figure it out. And that's where the variable in price can come in. And then also deductibles. So depending on what kind of deductible you want, as with most people are familiar with health insurance, the lower your deductible, the higher your premium typically is. Same thing applies for home insurance.
Okay. And then let's talk about every community, they kind of have like small, medium, large. So the larger homes, usually 2,500 to 3,000 or 3,500 square feet. What can that range? And I know that could be different if you have a $3 million house, or if you have a $900,000 house, but let's say, Talon Preserve, for example, because I've done a lot of business in Talon Preserve, $1 million house, 2,600 square feet, might have a pool, might not have a pool, what can somebody anticipate paying?
I mean, probably around the 3 to 5, if I had
Okay.
to like throw a little range in there. And again, and Matt, I know you know it's hard for me to give these
Yeah.
numbers because this could change tomorrow.
Yeah, right.
But I do think it's a pretty decent gauge to have an
Yeah.
understanding of when you're starting the home buying process to say, okay, here's the reality. I mean, Talon Preserve is a little bit coastal still, although not actually on the coast compared to some other new construction properties. So that can shift depending on where that new construction is located as well. So kind of going in knowing that general range, I think can kind of take that fear factor down a little bit because I think at this point, all the news up north has really scared people to think that we're talking about $20,000 for a single family home. Is just not the case typically.
Right, which we're going to get into tomorrow because we're going to start talking about flood insurance, waterfront property. That's where some crazy things happen.
Yep.
But, you know, with new construction, are all new construction made equal? Like in the sense of you have Talon Preserve, but what if we shifted over to a community in Lakewood Ranch? You're east of the interstate for 10, 11, 12 miles from the water, or Sky Ranch or something like that. Are the premiums relatively the same? Because I say this because I have buyers, and when they come down, a lot of them, they're looking for a brand new house. We don't know if it's going to be Talon Preserve or Sky Ranch or Star Farms. We're kind of looking everywhere. Can they anticipate insurance rates to be pretty similar across the board because it's a brand new house?
I would say pretty similar. The difference is that when you go further out to the interstate, you're going to maybe have access to other carriers where the closer to the water it is, some carriers might shut down if they might not offer that close to the coast. So each carrier has their own underwriting nuances and what they like, what they want for the day. It feels like. And that shifts and that changes. But generally speaking, I mean, the way to get the best rate in Florida right now is to get a new construction house.
Okay, that is the best way to do it. Okay, so let's shift this conversation a little bit over into some resale properties, right? So you have new construction, you have resale properties. There's one specifically that I wanted you to pull up, and you did a great job. And I'm going to share my screen with you. So this is a property that is actively on the market right now for $750,000. It's 12 years old. It was built in 2012. It's 2,400 square feet, 4 bedrooms, 2 bathrooms. And I am going to pull up the insurance quote that you kind of gave us. Talk us kind of through this. So this is a house. It's 2,400 square feet. The premium's coming in at $3,000. Talk us kind of through what we're seeing here.
Sure. We quoted this through a private carrier. So one thing that maybe people out of the state aren't familiar with is that Florida has their own insurance carrier. It's state backed. They actually happen to be the largest insurance carrier. That is not the most ideal route to go. So we always are going to quote it through another carrier if given the option. To provide better coverage, and typically in this instance it's a better rate for them as well. But we're covering the dwelling structure. So what the dwelling is basically the actual structure to rebuild. So if this were to be a total loss, we're covering that at $615,000. What is done is it's called a replacement cost estimator. So it's essentially just an algorithm where the information is plugged into, and it spits out how much it would cost with cost of construction today. Now, obviously, that number can vary depending on cost of construction. Cost of construction goes up and cost of construction goes down. Where we're sitting at today when we do this quote, that's kind of where this exact home to rebuild it, without the things that you own inside of it, that's what it's going to cost. So the big questions that we get a lot of times from homeowners or buyers is it does not match the listing price. It does not match what I paid for it. And a lot of that, it's important to realize we're not insuring the land and we're not insuring the market value. So that's why you're going to see the dwelling coverage is always typically going to be less than what you paid for. I guess unless you got a really great deal. Then the other structures, anything unattached, personal properties, what you own. So that can be flexible as far as how much you own. And then, the other things, we set the deductibles, which is pretty standard. It is 2% hurricane deductible. That's a separate deductible if you have a named storm. Compared to what's called all other perils, it's basically anything else. We set those at pretty standard rates to get this quote.
So I'll share the story. We were just literally last week on the phone. I was showing a property that was built in, I think it was 1992. So it's over 30 years old, and you enlightened me of this 30-year rule, which I'm going to have you explain in a minute because I had no idea about this. The current homeowner's insurance was just under $1,600 per year.
Right.
It's the original windows, 30 years old. So it's not hurricane windows, probably the original garage door. Who knows? Probably not hurricane code. And he's paying $1,600 a year. He bought the property in 2018. So that was kind of probably what he was paying in 2018. And he just renews his insurance every single year. We reached out because we're looking at buying this and got a quote, and it's $6,000 or $7,000. And my buyers, poor them, they're like, excuse me?
Yeah.
What just happened? He's telling us, he's very adamant, you guys are going to be looking at the same thing that we are. First of all, sellers always say that.
Right.
Second of all, how does something like that slip through the cracks? If you're renewing a policy, I find this all the time where you go show a house and you ask, hey, what are you paying for insurance? And they tell you, oh, we're paying $2,000. And now when you go sell it, it's triple that. How does that happen?
So sometimes insurance carriers are willing to keep on the existing risk that they have on the books. So they might offer a renewal. Remember, those policies are only good for 1 year. They might not get a renewal the next year. It sounds like these sellers likely did.
Yep.
They can also totally change the rate the following year. They, for whatever reason, think it's a risk that they had evaluated to be okay at that price point. And so they did that, but they're not open to maybe necessarily having a new policy on the books. So that buyer goes, or that seller sells and he no longer has that policy. They're not taking on new policies.
Right.
Therefore, they're not even an option a lot of times. So we have to look at other carriers who are open.
Got it. So you think he could have a certain carrier that he's had since 2018, and they've looked at that specific property and said, yeah, we're just going to keep renewing. We are accepting the risk of it.
Right.
We're not going to take their neighbors to issue new policies. And now when it's sold, we're not issuing any new policies in there. So now you got to go to a different carrier.
Right.
Hence kind of what your company does. You shop at different carriers. And then that's where we're landing at, hey, this is $5,000 or $6,000 or $7,000.
And it's not to say that come next year when his policy were to renew, it wasn't going to jump up for him either. But when evaluating, like you sent the policy over, it shows that he's got an active policy for a significantly better rate than what the original option was. But it depends on the carrier, it depends on the coverage, it depends on a lot of different things, and it really can vary from buyer to buyer and from year to year and company to company. Another little piece of it is the insurance score. So I know line item on his was essentially a good insurance score discount. If you have a buyer coming in that doesn't have as good of an insurance score, they're not going to get that big of a discount on it. So that's how the individual can have a little bit of a different rate with the same exact property.
Got it. So what are some best practices?
Okay.
If you're a realtor and you're helping buyers, or if you're a buyer right now out here, what are some best practices that these buyers can be looking for, in terms of age of roof? We're talking about this 30-year rule, properties that are 30 years and older. Talk about that.
Well, for one, the best practices are always going to be getting insurance involved as soon as possible, because what we find is that there's a lot of underwriting things that can pop up that need to be addressed or need to be considered, and you want to be within that window when you write these contracts to be able to renegotiate or to have them fix or repair. The biggest mistake can happen is if the buyer waits too long to get insurance. It's an afterthought for them. These issues come up, and now it no longer meets their requirements for their loan, or it no longer fits their needs for their family, or it becomes a bigger thing that they wanted to deal with. And now they don't really have an option to back out, or they don't have an option to have these things fixed or repaired. So insurance getting involved as soon as you're under contract is really something that I cannot stress enough, because it just gives you that leeway and that the ability.
Yeah, and I think that's kind of shifted a little bit, because before premiums, they weren't as drastic of what they are today. And so I remember, we have got two different types of contracts in Florida. You have the standard contract and you have the as-is contract. The standard contract kind of takes the power away from the buyer in the sense of you're going to go under contract, you're going to have your inspection, and then the seller is required to make repairs based on the inspection results. The as-is contract, you're going to go under contract, you're going to have your inspection. Seller's not obligated to make repairs, but we like to ask them, because the worst thing that they could say is no. But the problem is if you're on the standard contract, and all of a sudden you get an insurance quote that you don't like, you can't cancel because you have a bad insurance quote, unless you no longer qualify for the loan. But you can't just say, oh, it's $5,000, I want to cancel. If you're on the as-is contract and during your inspection period, you get all these quotes on the front end, you find, hey, this property just seems crazy. It's $7,000 to insure this house. I don't think I want to buy this house, Matt. Great, under the as-is contract, we can terminate, get your deposit back. So it's really important, and I think that's why with this particular property that we're talking about, it was the standard contract. So I said before we agree to anything, and we agreed to terms and the price and all that, and I told my buyers, I said before we do anything, this is a standard contract. We are going to call insurance agents. We're going to get quotes. We're going to call his agent to say, hey, will you issue a new policy? What's it going to be? Because could this be a deal breaker for you? And we have no right to get out of this contract. So, what other elements should a buyer be looking at in terms of when they're looking at a resale property?
The big one right now is age of roof. So right now on the 4 points need to show that there are at least 5 years remaining useful life. That's going to be the really big one that comes up that causes hiccups.
And who says 5 years? Because I'll have a seller say, I got a 50-year warranty on this thing. Yep. It sure has 5 years to be useful life. And I say it's only as good as insurance carrier says it's good for.
Or it's actually only as good as the inspector puts on the 4 point.
So can a general home inspector do that, or does it have to be a roofer to say 5 years of life?
No, it's on the 4 point inspection, which is done by a general inspector. They will oftentimes, if the house is 20 years or older, it's a requirement for insurance to have the 4 point inspection done. And so oftentimes you'll organize the general inspection, which is the one that you want to make sure all the, doorknobs turn properly and the doors open, and also looks at all of the major issues, but the 4 point specific for insurance carriers, and it looks at eligibility. And so the carriers at this point have said, we do not want roofs that don't have anything more 5 years or more left on the roof. And that's including Citizens, which is the state's backed last resort insurer. It's 5 years. It was previously 3 and it's kicked up to 5. And that's, again, I think a lot of it has to do with some of that fraud and things that we had talked about before. Because what was happening is as these roofs were aging out, they were hitting 14-year on a shingle roof. All of a sudden now they have a claim.
So let me ask you that on shingle roof.
Yeah.
How old of a shingle roof are you seeing where before an insurance carrier says, no, I know it doesn't have any leaks, but we're not going to do it?
As long as there's that 5 years.
So it could be a 25-year roof, but an inspector goes out and says, yeah, you do have 5 years of useful life. Insurance carrier doesn't care. That's good enough for them.
As long as there's 5 years, we can find a company that will find placement for them, as long as it's on that 4 point inspection. Now remember, with 5 years remaining useful life, that's the limit, the lower limit. So we're talking about next year, it's going to be 4. So that means your buyers would have to replace the roof within the first year of owning the home. And as long as they understand that, and it's something that we educate on to try to help them make the best decision, then it's all good. But that's really where the hiccup lies, and it's up to the inspector to determine. And at the end of the day, they're going to look at some of those thresholds that we used to look at with insurance, which was 15 years on a shingle roof, 30 years on a tile, and 40 to 50 years on a metal roof. Thank you. But that has kind of shifted. We don't really look at that from an insurance perspective. We just look at how much life is left. So you have these roofers that go out there and they sell the 25-year shingle roof. Right. It's great, but if you don't have an inspector that says that there's still 25 years on it, then it doesn't matter.
All right, so now I got to know. All these things, we have some legislation helping with some of the fraud and other things like that. Prices have gone up crazy. What do you predict moving forward? What do you see kind of coming down the pipeline? Are buyers, are we just going to have to take this on the chin, or do you think it's going to get better? What do you see?
That's the $1 million question, right? At the end of the day, remember that insurance is cyclical. So it has hard markets, it has soft markets. It's hard right now. However, it is softening. We feel it softening. There are more companies entering the market. More quotes are coming back. We used to run quotes and it was deny, 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 deny. Here's an option, here's an option. Now we're getting multiple options. We've seen some renewals this year already that have come back at better increases than last year. I will tell you, over the last 3 years, insurance rates have increased 102%. And the last year it went up around 45% alone. Wow. This year, the Insurance Institute is still predicting a double-digit increase, however, better than last year. So that could mean as low as a 10% increase. We have to kind of wait to see what happens, but I've seen some renewals come back that have been the same. I've seen a couple that have been a few dollars less even. But there are more options to be able to find those for the buyers and for the people who own the homes currently. So the market is certainly softening, and our goal is to get it to a point where over the next couple of years that we just see those general inflationary rate increases as we were used to before, that general 3%, where you see that dwelling coverage go up 3% because the cost of construction went up.
Julia, tell us, tell the viewers today, how can they get in touch with you? What makes D's Insurance different, being here local than other providers that maybe they've heard of?
Yeah. The big thing in Florida, we have regional carriers. So if you're coming from out of state, you will likely not see those same carriers here in Florida as an option. So calling your agent from up north, they're not going to have access to the carriers that are in Florida. So that's why using a local Florida-based agent is so important. And what makes D's Insurance the top-rated agency in the state of Florida is because we care to educate our buyers on what they're getting for the price they're paying. We try to help mitigate any risk for bumps in the road when it comes to anything that happens through inspections or whatever to get to closing. And also we're just knowledgeable agents. We have a seamless process to make sure that you don't have those hiccups, and we have access to all of the top rated carriers. So it's a misnomer to think you have to shop around to multiple agents, because no agent can get a better rate than another agent, all things equal. Same house, same buyer, same carrier.
Right.
If somebody gets a significantly lower rate, that means that they cut the coverage somewhere. And we think it's important that the buyer at least knows what they're getting.
Yeah.
We'll cut coverage if you want to cut coverage, but you need to
right.
know it. We're not just trying to sell you a policy. We're trying to provide you with a ability to sleep at night and know that your biggest asset that you just purchased is being covered.
Right. Well, I appreciate you taking the time to come on today. And I know tomorrow I want everybody to come back, because we're going to hit some real hot topics. We're going to talk about waterfront property, some luxury options. We're going to talk about some short-term rentals. Do you need extra insurance if you've got tenants in? What's the liability of that look like? Because Sarasota's pretty popular for short-term rentals, at least right now. And then we're also going to talk about flood insurance. Do I need flood insurance? Does everything need flood insurance in Florida? Who needs it? Who doesn't need it? What does it cost? We're going to tackle all that tomorrow. So thanks so much for joining us today, guys, and we will see you back here same time tomorrow.